George Bell here, investment analyst, to bring you up to date on the key market moves over the last 24 hours. Two areas which I'll cover today, one being a popular topic, volatility within Bitcoin. We will discuss the moves observed in markets yesterday and the reasons for that bout of volatility. Secondly, we'll cover the key takeaways from the published minutes of the Federal Reserve Open Market Committee meeting which took place in April. Interest in cryptocurrencies has grown amongst many communities, one of the more popular examples being Bitcoin, which we've discussed many times on our weekly podcast. Yesterday was a demonstration of significant volatility experienced within the instrument. The value of Bitcoin fell 31% in the morning and then rose 33% in the afternoon. So why did the value fall so aggressively in morning trading? One significant reason was the People's Bank of China warned financial institutions about accepting cryptocurrency as a form of payment, leading investors to doubt the practicality of the instrument being incorporated into a greater number of payment mechanisms, but also concerned that regulators will tighten their oversight on the instrument. China has been tightening activity within the space crypto can operate for some time as they progress on a journey to introduce a centrally managed digital currency, offering the People's Bank of China greater transparency over transactions. This comes just a few days after Chief Exec of Tesla, Elon Musk, also appeared to cast shadow on the take-up by corporations as he pedaled back on a number of his previous comments around the firm's appetite to accept the currency as a way of payment for their vehicles, but also recognising the significant energy requirements to mine Bitcoin, which doesn't fall in line with their environmental energy policies. Concern around volatility and the profile of environmental challenges are shared too by many central banks around the world. So why did the value bounce back? By afternoon trading, UK time, Musk took to Twitter suggesting Tesla was holding Bitcoin and was not one of those sellers in morning trading, giving investors comfort, hence the bounce back in the afternoon. For us, yesterday was another example of the level of volatility which is associated with crypto instruments and the sensitivity to policy and guidance around the prospect of integration into core payment mechanisms by central banks and corporations. The second area to discuss being the minutes reported from the US FOMC meeting. The minutes were from April's meeting but are heavily reviewed by analysts to get a greater sense of monetary policy focusing on interest rates and bond purchase programs. It's not only the forward guidance which is taken into account, but also the language and the terms which are used in there. We already know that in April, the Fed maintained interest rates at the current level of 0 to 0.25% and maintained their quantitative easing program at the current pace of $120 billion per month. So what did the minutes tell us? Well, the key takeaways for us were the FOMC members' recognition of the strength of the economic recovery. However, a number of FOMC members suggesting that discussing the plan for tapering the pace of bond purchases in upcoming meetings may be appropriate. And whilst the recovery is going on at pace, the majority of members reinforced the view that the economic recovery is far from over, so more work is required there, and anticipate the inflation spikes, were above the PCE target of 2%, to be transitory, accepting the rate to ease towards a more normal level towards the end of the year. For us as a team, the minutes provide interesting reading. We know the Fed's objectives around reaching maximum employment and an inflation rate of 2% on a PCE basis. Over the longer term, and they come at a time when, on one hand, we've just experienced disappointing employment reports with new jobs falling around 750,000 short of expectations, and on the other hand, inflation prints coming in higher than anticipated at 4.2% in April relative to expectations of 3.6%. Whilst the minutes are demonstrating some division in opinion within the members, which provides healthy challenge, for now central banks remain focused on the achievement of targets and the stabilisation of the US economy. This includes remaining poised to respond with policy if required. That's all for today. Thank you for watching, and we look forward to seeing you again on Morning Markets.
Subscribing to True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.